Major funding for these broadcasts has been provided by grants from New York Community Bank, Capital One Bank, Eastern Consolidated, M&T Bank, Sterling National Bank, Meridian Capital Group, Customers Bank, Aerial Property Advisors, Dime Community Bank, Perfect Building Maintenance. Additional funding has been provided by AKA Hotels Corman Communities, AmTrust Title Insurance Company, AVR Realty Company, Avison Young, Bank of America, Merrill Lynch, Bank Leumi USA, Briarwood Organization, CBRE, Chase Commercial Term Lending, Chase Mortgage Lending, JP Morgan Chase, Citizens Bank, Cohen Equities, Colliers International NYC, Collins Building Services, Connect One Bank, CPEX Real Estate Services, Douglaston Development, Levine Builders, Flushing Bank, Friedman LLP, Handler Real Estate Organization, Handro Properties, Hodges Ward Elliott, Inc., Investors Bank, James D. Kuhn Real Estate Center at Syracuse University, Kilroy Architectural Windows, Madison Realty Capital, Matone Group, Mercantile Bank, New Banks, Newmark Knight Frank, Optimum Window Manufacturing Corp., People's United Bank, Pulcinelli, Rockefeller Group, Rosewood Realty Services, SJP Properties, Stonehenge Partners, TD Bank, Terra CRG, the Knackle Group at Cushman & Wakefield, the Merinkoff Family Foundation, the Moynihan Group, and these friends.
Residential development in the metropolitan region, which we might talk about a little Philadelphia also, but not Seattle. What's happening? Who's doing it? Where do we see the market? Where are the opportunities? So today, with the help of my executive producer, Joe, we have put together a group of young guys who are really involved with residential development, and they're going to provide their insight. We hope their insight today. My guests include Jason Kaufman from the University of Michigan, who is with Silverstein Properties, Ben Levine, who is a graduate of Wharton, who is the Vice President for Development and Acquisitions of Douglaston Development Levine Builders, Bryan Kelly, who is an Executive Vice President at the Gotham organization, and last but not least, receiving the title of Executive Producer,
That's
Joe
fantastic.
Pizzutelli, who is a Vice President and Team Leader at M&T Bank. Now, without you, besides the fact of bringing this group together, even though we did know the two of the groups over here, and we always favored the Wolverines over here, better have a good football season this year. You're the banker. How do you look at dealing with new developers?
I mean, the new developers, the issue is they're new. So for us, we're looking to deal with people that are sitting around us today, the established developers who have experience, long-lasting relationships with us, and we know they're going to stand by their projects. So we're getting continually construction requests in the door. It's just we're picking our spots and really going after the top-tier sponsorship.
Let's look at markets. I mean, you're with Larry, who's been on the show many years, and Marty. And Silverstein was one of the first people to go to Hell's Kitchen, let's say, and the Far West Side.
Right.
And you're back there again today in two different markets. So let's talk about what you're doing planned on the former Mercedes-Benz site and also on the former Trump site, President Trump site, okay?
Sure.
On the West End.
So first part first, on the former Mercedes-Benz site, we have subdivided the zoning lot into two tax lots, and we're in design development to build around 500 affordable luxury condos. on top of a 49,000 square foot retail base. And then in a subsequent phase, we'll build 1.5 million rentable square feet of office.
When do you think that'll take place?
We'll break ground on the first phase in September of 2018. And then the office building will be at a later date if and when the 7th.
Now, will that include affordable condominiums?
No, it's going to be 100% market rate.
100% market
Yeah.
rate, okay. And what about West End Avenue?
That project is underway. We're getting TCO this week. We're 70% sold. Project's doing very well.
How many units are over there?
246 with some inclusionary housing, and then around 160,000 square feet of commercial use.
Let's talk about you, Ben. What are you doing? You have a number of interesting projects today in the residential market.
Joe actually financed a condo job in Fort Greene that I've been working on. It's a 22-unit conversion of 2 former church buildings with 4 additional ground-up townhouses that we're building. Hopefully we'll be delivering that by next summer. We love the market. We love the product. We think it's unique. You don't really have renovations of that size in the neighborhood. Usually it's more brownstone conversions and things like that. In Williamsburg, we just TCO'd a 554-unit rental level. We've had a very strong first month of leasing. We opened about 2 weeks before the TCO, and we've already seen 50 deals and numbers that we're very happy with. And then we're working on a big project on the far west side, and we're just waiting to go through a formal
We're in the
rezoning.
far west side.
In West Chelsea.
Bryan, let's talk about what Gotham's doing.
Gotham is currently completing the Forge in Long Island City on Purvey Street with Browse Realty, where we're the co-developer of that property. It's a high-rise that M&T.
That's a residential rental.
Residential rental was one of the last 421A projects that could be all market rate. We're also currently planning to start demolition and break ground come year end at 515 West 42nd Street on the west side of Manhattan. It's the current Travel Lodge Inn site that's a through block just west of 10th Avenue, and to construct under the new 421A program or Affordable New York, 70-30 tower, 350 units with some small
For my
small ground
audience,
floor
could you
retail.
explain the new 421A program, the Affordable New York program, the 30% level?
Well, there's a couple of options. The first option, which is less likely these days and the most palatable, is to utilize tax-exempt finance with the as-of-right LIHTC credit for the affordable units and to have 25% affordable. Due to the extreme demand for volume cap throughout the state between the city's affordable housing goals and the state's affordable housing goals, they're allocating the volume cap to traditionally all affordable projects where the cost per unit is lower. So in this case, we've selected another option. We're north of 300 units, and it has more of a moderate to middle income component for the affordable housing. So for the loss of the benefit of the credits, we have a little more
And what are
revenue,
you
but
doing in
more affordable.
In Philadelphia?
In Philadelphia, we submitted in conjunction with Brandywine, who is the point master developer, for the 30th Street Station RFP, which will consist of more than 7 infill sites comprising a live, work, play community, and Gotham is intended to oversee the residential development component of that.
And Joe, as the banker, what are you seeing, and what type of deals are you feeling comfortable with these today?
I mean, again, it always comes back to the sponsorship. So let's move aside from that. The deals we're seeing today are a lot of, we are seeing the high-rise rental construction going on. We are still seeing condo requests come in, and we're taking a harder look at that as some of our, higher margin stuff that we did in 13, 14, 15 starts to come off the books through sell downs. I know this is a residential topic, but we are active, I would say, now on the repositioning of office throughout the city, whether it's Midtown South or we just closed a deal for Silverstein on West 54th Street that was sizable. But we're still able to play in that smaller realm too on the residential side, where you have someone coming in, they're going to split up a large 1-bedroom down the Lower East Side, and we're going to renovate. They're going to renovate, and we'll provide the financing.
Right, the
that,
repositioning type
yeah.
over there. But where are the opportunities? I mean, Silverstein is doing major jobs. Levine has a couple of things, because besides that, I think Levine's also doing some affordable in the Bronx.
Yep.
Okay. Where are the opportunities for residential development? Because land prices continue to be relatively high. The condo market has, with the exception, you did very well downtown, right?
30 Park Place, right.
30 Park Place, that's the Four Seasons.
Right.
So how do you do, what were the prices?
We're blending to just under 3,400 a foot. We're 85% sold by unit count.
Now, with regard to that, which I think is an interesting discussion, where are the buyers from? Are they foreigners? Are they New Yorkers? Or are they, because a number of the developments in Tribeca where the prices are in the 3,500, most of the people are residents of New York.
That's exactly what we're seeing at our project. There was a initial influx of foreign buyers and investors, as I think everyone would agree happens in condo projects, but the vast majority are locals.
And what do you see in Fort Greene?
In Fort Greene, I like to say it's, there's Tammy and there's fire, and I think that Fort Greene is more fire, but I've changed it to Pharrell, which is finance, insurance, real estate, and lawyers. I think it's a lot of young families, people that want space or want a townhome, and they are priced out of neighborhoods like the West Village and downtown, and they love it. It's a great price point, it's a great relative value, and you're still getting the quality of construction and design that you would in Manhattan in a unique project in Fort Greene.
What about Long Island City? Because, anybody, I think the best example is somebody comes in from the airport and rides through Long Island City, and they remember, when it was really an industrial place. What's the nature of the tendency that's going into the Forge?
So the level of quality that Gotham normally employs in its buildings are a higher quality level that are boutique-ish in nature and feel like home, not a rental apartment, and the amenities have a unique touch. I think when the impact of seeing all of the new buildings is really shocking, like you said, to anybody who visits the new neighborhood, but there's a lot of product. And so from that perspective, there has to be differentiation. Quality of amenities, not per se abundance. Abundance doesn't necessarily rent apartments. We've actually found in our portfolio and other submarkets that competition has taken tenants, but a year later that same tenant is coming back because they were sold on 30,000 feet of amenities, and then they realized the experience wasn't quite the marketing that they received just on an initial walkthrough.
It's interesting. 2 weeks ago I did a show, and this woman was saying that her son just moved back to New York, and he, as opposed to taking a one-bedroom apartment, he took a studio apartment. And the reason he took the studio apartment was the building had all of these amenities with the basketball court, with other situations over there. And she said to him, but you need room for a closet. You need room for other things over there. So, the amenities are important, but there's a level. You were saying?
No, I think that I could speak to that. It's not just the size and the quality of amenities, it's having the right amenities. If you look at a neighborhood like Williamsburg, when we first built the Edge, we had spa treatment rooms for massages, which were next to the indoor pool. People didn't use those treatment rooms. They ended up using them for stroller storage. When you look at our new projects on the waterfront, our rental buildings, for the profile of tenant that we have, they want a great gym. They want somewhere they could sit and they could work, because a lot of these people work from home, or they're not always in the office, or they're traveling, and they want a community space that they could be in with other people that are working, not like a live work, but somewhere that they could just feel like, even though they're working out of their building, that they're not alone. Especially in Williamsburg, having the big outdoor amenities with the pools and the decks. If you go on a Saturday or a Sunday during the summer to 1 North 4th, it feels like you're in Miami.
Now, what about amenities on 1 West End Avenue?
So we have 30,000 square feet of amenities, but I would say in addition to the in-building amenities, we always look at the retail as an amenity to the rentals or the condos that we're selling. You look at what Gotham did with Gotham West Market. In between Silver Towers and River Place, we have a beautiful outdoor park. But to answer your question on 1 West End, 30,000 square feet of amenities, it's, we're all competing in this amenities arms race. We did an interesting study on 41st Street when we were trying to figure out who our buyer profile is going to be, because we're going to be selling 500 condos. And what we found is that it's not about a occupant intending to use the space. It's so that they can check the box to impress their friends and for resale value.
I haven't heard that so much on amenities in a long time.
No, I mean, a lot of these are built, it seems that, they say it's the most highly amenitized package that you're going to see in Long Island City, and then everyone says they're the next highly amenitized. For us, we do talk to the developer and wonder, how often is that golf simulator being used, or how often is the bowling alley or rock climbing wall being used. We're looking at it as an extension, as Jason said. When you, referring back to Long Island City, you talk about Gantry Plaza. So you walk around there and you were saying what's the target market. From an amenities standpoint, as say 3 of us were, recently living there or considering living there, there's something to do outside of the building with your young children and your family as you walk around. So from us, we're not valuing the apartments any higher because there's a rock climbing wall.
Just to add, to go back to our project in Fort Greene, which is a 22-unit condo conversion where in order to keep common charges reasonable and because of the way the building services, you won't have a doorman at the building, but being able to tailor the amenities that you have, whether it's a pool or a virtual doorman, so that if someone is in the building, they could get a package or dry cleaning and they don't have to worry about it. Amenities go down to the smallest details, like how you manage a package room, or if someone is in a non-doorman building.
Or if it's the right size.
Exactly.
Recently, Jet.com, which is owned by Walmart, came into this program with a latch for buildings which don't have doormans to give the package room that the delivery man can bring it in and for safety's sake. Okay, so that's an big thing. One time there was also the question for the Fresh Direct for the deliveries to over there.
I know that we said that we're not going to talk about Seattle, but Amazon has also implemented a similar program where
it's called Amazon Locker.
Yes.
Amazon Locker is currently in 1,800 locations around the country, 51 metro markets. And ironically, people wouldn't be aware, but currently there are 18 Amazon Locker places in New York City, in places like Rite Aid, Blink Fitness, Gristedes. So people can have their opportunity to have the package delivered. You did, I think you personally were involved with the financing of the Monadnock small units.
Yeah, it's been
micro units. Let's talk about that because people, are living in smaller units. We were talking about the repositioning of apartments where somebody took a 2-bedroom and made it a 4-bedroom. Okay, or even so on.
Yeah, it's been a tremendous success at that project. 305 square feet's the average size of the unit, and they're renting for well over $100 a square foot. The people that are renting here are not just the nurses that are working nearby, but it's also a pied-à-terre for people that want to come in and be with their wife, say, they're empty nesters, be with their wife in the city on a weekend and not have to just rent a hotel. They can actually have their clothes there and they can shower, go out and do whatever they want for the weekend. So the micro units, that's to that, but then we're also seeing stuff financing for Icon and Benchmark and that sort of thing where they're splitting up these.
Which is what I'm saying. You're
yeah.
taking the large 1-bedrooms. If you have the light and air, you're building another bedroom and so on.
We struggle sometimes now. Do you go by per square foot or are you looking at it on a per bedroom basis? We're so often strictly looking at the per square foot and the numbers look astronomical, but we all know it's a share. It's going to be a share.
We've written a white paper internally as we explore that entire model, and the irony is that the absolute rents on some of the micro units, for example, at Monadnock's project, didn't come at a price point in an absolute terms that was relatively cheaper than a studio apartment and a lot of other options. When you add in the total cost of amenity fees and all the different lifestyle aspects, the absolute out of dollar is relatively neutral.
But I think it speaks to quality of design, and intent, right? I think that when you create a product that the consumer wants, we have gone over the last 10 years and we've started to make units more efficient and go with bigger amenity packages and not rock climbing walls, but
Right.
making someone feel, as I think you said earlier, like they live as a part of a community and a home, and that their apartment is almost an extension of the building,
but
not the
I
other way
think
around.
something relating to the Gotham is the Gotham market,
Yep.
which they took over there. The buildings were built. It was before the time was really ready, and they needed this amenity of the market, which was really very valuable. My only problem today, not with Gotham market, is that there are too many markets being built. I believe, there's a question of saturation. It's a question of how many coffee shops, how many.
It's also a creative way to deal with a challenge as it relates to retail. I mean, when we opened the Ohm, our building on 30th and 11th, we had negotiated a deal with an art gallery at a significantly higher rent to open a gallery on the corner of 30th and 11th. Now, this was years before Hudson Yards started, and we ended up ripping up the lease because we hadn't signed it, and we signed a market for significantly less. And this market was open 24 hours a day. You could access the market directly off the lobby, and it became a real amenity in an emerging neighborhood.
I think part of the problem with Long Island City is that it's under retailed, okay? And this is a problem because you have all these people moving in there. You have 14,000 new apartments over there, and you can't go to Costco to pick up everything over there, and you can go to Walgreens or something else, but you need other situations.
Well, there are hardscape limitations in Queens that are just going to prevent a lot of the national retailers from going in there because they're just not going to see the critical mass going underneath the ramp up to the Queens Midtown Tunnel, for example. I mean, it's going to be an obstacle that's probably insurmountable.
Silverstein has remained predominantly in Manhattan. Okay, Gotham has, until recently, remained in Manhattan until you went to Brooklyn, on the Ashland Street, and over there. You've been all over in the different boroughs. Do you see opportunities in Queens? Do you see opportunities, as we were talking about Westchester and the New Rochelle, where people are looking at that, the White Plains? Because one of the areas where there's major residential growth is the transit-oriented development. Something that's close to the train has really done well.
I'd say globally we're focused, aside from submarkets, on affordable housing and mixed income housing. And similar to Douglaston's approach, where land values are and where rents are, we think opportunities are in competing and winning RFPs and partnering with not-for-profits that have undercapitalized properties, or partnering with entities that would like to develop their property and have value in their property, don't have the internal expertise to execute. So I think that's where opportunities lie. From a submarket perspective, I would be lying to say that we're focused on one submarket, because if there's a good deal, there's a good deal. I think areas that are interesting, though, are Upper Manhattan, of course, certain pockets of Queens, perhaps just slightly east of Long Island City or just north of Long Island City, certain parts of the South Bronx. But I think Joe will tell you, we call him and tell him, I want to develop a 70-30 rental building in Mott Haven, and I'm underwriting $45 rents, there's going to be some resistance. So it's sort of a chicken or the egg scenario when you think about those submarkets.
Jason?
Drafting off of our redevelopment of the World Trade Center, we are along the Jersey waterfront and neighborhoods inland. We think that access to the light rail and the PATH train leading right to our doorstop is going to be a both absolute and relative value when you start looking at the other suburb and the outer boroughs of Manhattan. We were stalking horse bid on a couple projects in Brooklyn along the waterfront in the last couple of years. We just haven't been able to really reach for it, but we think that that's a great neighborhood.
What about you have the Silver Towers, the Silver
We do.
Suites. What is that?
So we used to run a corporate housing entity within that. Actually, M&T just refinanced for us, and we subsequently converted into market rate housing. But it lied within Silver Towers, and that was actually our business model for the Beekman Tower on 49th and First that we built and renovated, that we repositioned.
And then you sold that over there.
Yep.
What about my subject with regard to the transit-oriented development to the Westchester, New Jersey markets? Have you?
Much more New Jersey than Westchester. We haven't been able to get our arms around the Bronx, although we're poking around, but sure, I mean, Silverstein and our core transit-oriented developers.
Because when I was doing some research, Silverstein even has a joint venture in Warsaw.
We do.
So but we weren't getting to Warsaw, even though he went to Seattle,
right,
over there.
Right, nor China. Right.
Or China. So where do you, as a bank, what do you think about these suburban areas? Or is it my friends from M&T's mantra, we like the 5 boroughs, or should we say the 4 boroughs?
Yes. Well, we were talking about Staten Island before, but I think there are definitely challenges. Having worked in the Westchester market, there's challenges with New Rochelle. There's challenges with White Plains. specifically in the office market. But
I
from a
forgot to
residential,
say you went to the Sunny of Albany, Buffalo.
Buffalo, yeah, sure,
Okay.
exactly. So there's still opportunity there, and if it's at the right numbers that we can underwrite, it doesn't seem to work oftentimes because we're underwriting a lower rent, and when we have to provide you, when we're saying we'll give you a 45% LTC loan, because this is the rents we're underwriting, it's not going to work for them from a return.
You know,
I
as
think-
somebody, yes, Brian.
I think in areas of Westchester like New Rochelle, the demographics are there. I think rent levels are strong enough to make rental product work. Usually the two issues are taxes, and are you able to obtain a payment in lieu of taxes favorable enough to make a project feasible? And then going vertical is challenging because of cost structure of development. So I think horizontal development, albeit dense, with the right pilot makes sense. And then clearly parking. Develop 300 units and require 300 units of parking. All of a sudden, 1/3 of your building is a parking structure.
Foundation.
So
Okay, here's a question with regard to two markets that I haven't discussed. One is Staten Island and one is Newark. Okay, people believe that Newark has potential. I did a show a couple months ago. I had the mayor on, and I think things are doing better. Personally, I'm not even asking for the corporate. What do you think of those markets?
Again, it's all about relative value, and I think Newark offers it. I think the transportation access is key. As for Staten Island, I've been there a couple of times.
You had to get a passport.
I'm short Staten Island.
Okay.
Yeah, I don't have much expertise in either of those. I've been to Staten Island probably 3 times as well, but Newark, I don't know.
Two opportunities that come to my mind is East New York and also near the Aqueduct racetrack where they're putting a new $400 million addition. Any thoughts about the East New York marketplace?
I think that the transportation there are opportunities for transportation to build around. The rezoning, I think, was helpful, but there is clearly a disconnect between real value and sort of the asking price for land out in that market.
I think you need to create places where people want to live, right? So if you can achieve that and if you can get scale, even if numbers make sense, you still need to get people to rent apartments, right? And I think that's really important. Whether we've been looking a lot in places like Long Island City and Astoria, with people who have owned sites for an extended period of time and they don't want to sell the land, they want to go into a JV, and it's tricky right now.
Any thoughts about Coney Island? I mean, you have a water, opportunities, but my problem with Coney Island today is exactly what Bryan was saying before about the ease of access to transportation.
Mm-hmm.
You do have a subway, but you have an hour coming into New York City.
And that's exactly what it is.
That's the problem over there. So for young guys who are developing and young bankers, I think the opportunities are strong. I think the world is a good market. And I'd like to thank Jason, Ben, Bryan, and Joe, and I'll see you next week.